First of all, I want to talk about the setup reflection channel because performance reflection, sorry, because I think people more using it for a setup reflection kind of thing. The idea of this channel was that you guys track your performance on a weekly or monthly basis and not share setups. We can also do a setup channel if you want to do that. The reason why there is no setup channel actually is because if you look at any big group, there is always the setup channel and everybody posts the setups inside and everybody always thinks they need to take trades all the time. And for what I've heard from mentees, from people I talk to, from my own experiences, that's not helpful because people always think they need to take another trade based on ideas everybody else is sharing. And I don't see a big advantage in that. But we can do this channel. I mean, it's a democracy. So if the majority wants such a channel, we can do that. But the idea of this really was either to like weekly or monthly performances. And I just figure that it seems too few people are really doing that. It seems to me like, I'm not sure because I have no clue what you're really doing behind the screen, but trust me guys, weekly and monthly performance recaps and really tracking your data is super important. I mean, it's the most important thing because if you want to treat trading as a profession, like you want to do this professionally, you need to see it as a business, and every business is recapping their performance each month, each week, looking back and saying, okay, good, this was a good month or not, and then they improve an area or they even neglect an area which didn't do as well. So this is important. Your setups, the setups themselves, so we're gonna dive into that. You, Joe, you shared this Tau idea and you also did that here. So we talk about that as well, but first I wanna just, or let's, no, I will do a poll after the stream to make sure everybody has the ability to vote about a potential setup channel. As said, I'm not a big friend of that, but we can do it. And otherwise, we're gonna look into your setups. Let me just check if everything's all right. Hello, Bashir, by the way. Nice you made it. So let's start with this here. So, and especially like performance reflections, it can be, this is, so just to fix those rules. Performance reflection is either a weekly or a monthly performance with percentage gain, RR, all the data that is useful to you. We talked about that. If you have an investment portfolio, the data might look different than for a trading portfolio. It all depends on what you're doing, right? And maybe you have two separate accounts and you can track the data of both of them. You don't have to share any private numbers. This is important. We talk in percent. We don't talk in numbers and in dollar numbers because first of all, it's not helpful. If somebody sees you have made a lot of money or a little money, it doesn't really matter. What matters is percentage performance. Or we can also do a single setup reflections thing here, but the idea is mainly like a combination of all your trades per week, per month, and a nice little write-up of what you learned. I think this is the most helpful in this regard. We can do the setup channel separately, also setup reflections if you want, and also like setups you share beforehand. But as said, this should not end up being a group like any other group where everybody's sharing setups and everybody feels the pressure to take trades all the time because, yeah, it's just not helpful. Everybody should trade their own ideas in my view. Okay, let's have a look in the chat. More noise, yeah, exactly. Yeah, and as said, it's a democracy. I tell you honestly what I think about it, but it's if the majority, I mean, if all of you guys would say, okay, no, we want that for whatever reason, I'm not going to say we're not doing that. But I'm telling you, it's probably not a good idea. Yeah, so then we do a poll after, but let's keep the performance reflection really for weekly and monthly performance. And if you don't do that for now, start doing it. It doesn't need to be weekly. If weekly is stressing you, weekly is like intense, especially if you're not a scalper, it probably doesn't really matter per week. If you're a scalper, it makes sense because after 4 weeks, you will probably have forgotten what happened in the first week and you cannot reflect as good on that. Because if you take 10, 15 trades a week, obviously you should like make it a little more detailed per week. But if you're a swing trader, monthly is totally fine. So keep that channel for that. And I do definitely a setup performance thingy, and we do a poll about setups in general. Okay, let me read this real quick. So first of all, why log? So what is really changing, like besides the fibs and stuff like that? Because this demand and this supply is still supply. For example, I only use log charts if I want to make, like, if I, for example, look at a chart that has lots of history. Let's take BTC here. If I look at, oh my God, sorry. If I look at this history, obviously all of this looks a little bit compressed compared to this move, but obviously if you remember 2017, it was way more volatile. And if I want to see the whole history of this chart, and it's a pretty old chart, I use log to make the moves better visible, like to see what the real percentage moves have looked like in comparison to now and stuff like that. But otherwise, I don't really use log. And on a coin like Tau, which is around since 2 years or whatever, I don't see an advantage in using log. So maybe you can explain what the idea was. And if you look at those levels, so for example, I would consider this whole thing here as demand. And this is then the refinement. And it doesn't really change anything if you look at log. Just the candles will look different, but the level is still, the price should be still the same around this level, obviously. But the candles obviously transform if you put a log. And then another question, I know you have shared another Tau idea. Why are you trading Tau specifically? What is the idea? What is the advantage in, for example, picking Tau? Maybe you can also explain that. So why log and why Tau? Why, for example, not BTC or ETH? So what is your advantage in trading Tau? What reason do you have? So Pong and Andy, you guys know each other. Nice. Nice to have you, Jack. So let Joe write his message. And this is the other idea. You said you want to take this short. Top of the 2 week. Stopped out with price grinding higher. I also can't really tell what these things are here on your chart. I mean, yeah, this is price. I guess this is CVD. This is then probably open interest, and I guess this is liquidations. So log, asset log to me is to compress, or not to compress, but to scale, like make the scale make sense on a very long time horizon. I don't think there is a big advantage on short-term ideas and charts that are not that old, because the area shouldn't change. So you have your supply area around this price, you have a demand area around this price. And so for example, I don't use it. That's all I can tell you for this reason. I don't use log. If you find an advantage in that, because obviously you have different trend lines then and whatever, if you find a reason and you can like back it up with real data, obviously maybe there's something to it. I can't tell you don't do it because I have not studied it myself. I can just tell you I don't use log for this reason. Here we have it with text. So this is TVD, correct? Aggregate open interest, right? Liquidations, funding rate. Yeah, so one thing I can tell you, if funding rate is negative, it just means there are more shorts in the system than longs. It doesn't mean price needs to go down, but it doesn't really add a lot of confluence to your own short. I mean, obviously we have seen price going higher from here until like here, until funding rate really went crazy negative, but it's not optimal. And so again, my main question is what is the advantage in trading Tau over BTC for you, or ETH? Doesn't matter. Yeah, so okay. And you shared Tau because I've tracked it recently. Yeah, so why am I no special reason for Tau? Okay, if there is no special reason for it, I would not trade it. Why? Because every altcoin that is on lower volume and potentially more volatile is also more erratic. For example, I only trade altcoins if there is a logical advantage to do that. So if there is, for example, a better RR, a cleaner execution, or sometimes specific coins lag behind. And so I use them to execute the idea that I would have done on BTC, but BTC, for example, went through this all a bit quicker. It's rare, but sometimes you have those kind of divergences where you can use an altcoin as proxy because there is a rational advantage of doing that. Most of the time, altcoins are harder to predict, they're more erratic, and so they're just harder to trade. And this is definitely something harder, is definitely not a logical advantage. And if you can't articulate a specific reason for yourself why you do that, there is no advantage. Then I wouldn't touch it. Like it's just this is just what I learned and what I've observed people doing. The less you focus on all those different coins, the better usually the performance gets. And I, for example, figured this just by concentrating only on BTC, my trading performance and also my results and also my level of confusion and mental overload went down significantly, but just focusing on one or two coins, and best case obviously majors, because those are ruling everything. And BTC has so much volume by now. It's an established, almost regulated asset with ETFs and everything. So it's not that easy anymore to create those erratic moves. You just need to compare like the BTC liquidation, like you remember in October, the BTC liquidation, for example, compared to ADA or compared to Tau, for example. This is already telling the whole story, right? This doesn't happen on a major asset. This only happens in the most manipulated crap section you can find, which is altcoins. And so what is the real advantage? To most people, they can't articulate the advantage, and so there is none. And as said, I understand your reasoning. For example, also, if you look at this, it's way more overextended than BTC, for example. But still, in the end, they all follow the bosses. And so you could focus more on those anyway from the beginning. And yeah, so this also brings me to, and again, we talked about the funding rate. As said, it's not optimal if the funding rate is negative. We can go higher from there anyway, and we did. But still, there are better opportunities out there. And yeah, in the end, you should see your mental capacity as a resource. And we all have limited mental capacity. And if you spread yourself too thin across too many different coins, too many different ideas, you will find yourself eventually either burned out or just simply frustrated, because it's exhausting at some point. It's similar to overtraining at some point. And so narrow your focus a bit. If you want to trade Tau, I'm not telling you not trade Tau. Why? I mean, if you can handle this coin and if you understand what it does and why it does it compared to BTC and the others, and you really have edge on that coin, why not? But like from a logical perspective, BTC and ETH are a lot more predictable. Okay, I just want to make sure there is no other question I've overlooked. By the way, the execution is still fine. So nice idea, you had a clean validation, you entered here, didn't work, you waited for the breakdown here. In this case, it did work. I don't know how it did after that, or if you're still going sideways. It's 27, so it's probably didn't do much from there. But at this point, your risk can already be removed. I mean, obviously, looking at the 5-minute can also add a lot of noise simply because it's lower time frame. But if you're able to handle this, this is a very clean execution. Waiting for this breakdown in the level gives you a higher chance of winning than just entering in the level. So good job here. And yeah, everything else I think is covered. We had this. Also, by the way, yeah, here. Thanks for doing the voting, and also thanks for being honest, because it doesn't really help if you're not honest with yourself. I mean, I understand we don't want to share everything in front of the group, but in general, these reflections make the difference, because people usually want to avoid the pain if something is not going according to plan, if we are wrecked, if we did something completely stupid. We need to look at it. It's painful, but pain and reflection, Ray Dalio said, pain and reflection is progress, and this is totally true. And I do those polls not to like whatever. I do it to make people see and to reflect and to share stuff with each other. Because I learned a lot being in a community when I started trading and sharing ideas, sharing losses, sharing wins, comparing myself to the others, and getting feedback from them and all those things. And it wasn't always pleasant. And so first of all, I'm super glad that 90% of you guys doing the vote do well. That's great. I think the majority in the open market, probably 90% of people are getting wrecked right now, or got wrecked again, chasing this because they thought, oh, super bullish, everything looks good, higher high and everything. How many people do you think bought here and bought on the first pullback and are now down 10%? I mean, 10% is not wrecked if you size properly, but still, it creates mental suffering. That's also why I make this differentiation, not effect according to plan, making money. Wrecked, mental struggle, big losses. Doesn't need to occur everything at once. Mental struggle can also occur simply because somebody is confused. You don't need to lose for them for that. You don't need to get wrecked for that. Mental struggle is also bad because it means uncertainty is still a problem. And it shouldn't, in my view, because the market is actually very simple. Once you have those clean validations, once you don't project biases onto your ideas and simply trade, keep on trading those plans. You make a plan. And for example, my ETH plan, ever since I entered first year, it didn't really change. Yeah, sure, it was up and down, but that's why you guys, you know why I keep my charts always like that usually. If you watch my videos and everything, and if we talk, my charts usually look like that. You will very rarely find me. I look at lower time frames, so don't get me wrong, but I can handle them. But if I show charts to people, they usually look like that. People should not forget the bigger picture. People should not look at a chart like this and getting super emotional by every little move. If you don't trade this on this time frame, why do you bother looking at that? It just adds noise and complexity. This is the big picture. If you trade higher time frame, this is what you look at. And as long as this low is not taken, your idea is not invalidated. And I also am not a friend of waiting for a breakout and then adding on this pullback. This is not how crypto works usually. So now, if you don't have any exposure, now would be the time, I say. But still, the time in crypto is usually on those big liquidation cascades. On the way down, you try to get your foot into the door, maybe wait for a change of character, maybe wait for this one bounce. This is usually what happens at the bottom. You have this one retest, more or less. Sometimes it's more severe, sometimes it's not. But this is where you go in crypto. After this happened, I'm not even sure if we're gonna take this high again. If we do, I'm still prepared. If not, I'm not. If not, it's also fine. And for example, I got stopped at break even on ADA because I kept my stop loss at break even hard, as I've told you, and we undercut this low. My entry was somewhere around this area, so stop loss at break even, but no worries. This is okay for me. It's not showing me any signs of strength here. And so I'm happy to be out of this trade. It doesn't really matter to me. And these were the only trades I've really taken around this level. Yeah, sure, I took some low time frame longs and I profited from those. But overall, the higher time frame idea, it wasn't high enough to take profits. It is also not invalidated. So I could also look at this like that and say, okay, nothing has happened, right? So no reason to struggle mentally. But I know it's easier said than done. So I'm not saying just do it, it's super easy. I'm just saying it doesn't need to be mental struggle. And a good way to avoid that is by just not zooming in too much, especially if you don't trade it. And so, yeah, guys, be honest with each other, be honest to yourself. Pain and reflection is progress. Yeah, nice, Victoria. Do that, do that. The month is almost over. We can now talk about monthly reflections, data. How many trades? What is the result? Maybe some trades that went horribly wrong and why. So, yeah. Yeah, I mean, unclear. And the whole life is uncertain, and the market is no different because some people claim, some people talk like they know everything, but in reality, they all trade the same market. And if you're not getting information from all the way at the top, inside information, you don't know where the market will go. You know, you have high probability levels. You take your trades based on that, and all the talking you see on social media, it's often nothing but hot air. Um, I can tell you that for sure. I was in a group, I said in the beginning when I started trading, and I met a lot of guys you probably know now as a social media account and this private group. And if you see those people trade, or I don't know, I wasn't in this group for a very long time, but I remember who was like legit and who was really like running a social media account like a social media account, because on social media everybody is always seem to win in the long run. But I've seen some people trade and talk very differently in this private group. So social media access no difference. Yeah, so keep that in mind. And everybody is worried about uncertainty. It's not what the human mind likes, but the whole life is uncertainty, and the sooner we learn to handle it, the better. And in the end, you take a trade here based on this demand, maybe based on this refined 7-day here. You put your stop below the lows, and you have three options: up, down, or sideways. And this is pretty much it. So the only uncertainty is, will this trade win or not? And we can only know once it happens. And for me, for example, my first TP for this idea would have been up here, because this is not something I would TP on a higher time frame. And so here, this 0.5 and the support and resistance level would be my first TP. If we don't reach it, I either get out at break even or I take the stop loss. I'm not sure of that, but if we don't see strength soon, especially if this day is closing red and we are coming back to my entry, I'm probably just closing it at break even and thinking about a re-enter after. But this is just me. So for example, if you don't want to involve yourself because you don't feel like you have the competence to handle your positions manually like that, just accept the risk. It should be an amount of money that doesn't bother you. The problem is that once people hear some kind of narrative that there is this super bullish reversal coming up, people oversize. And this is then also a real big problem for their mind, because they know if they can afford the loss or it's bigger than as it should. And all of those things, they obviously also create then uncertainty. So it should all be defined. If I take the stop loss, it's perfectly calculated. It doesn't really matter to me what the outcome is, so why would I bother? Obviously, my mind would love to know what's happening next, but yeah, that's just not how it works. Yeah, I mean, I do the narrative-based stocks, and I sometimes add some companies, I sometimes remove some companies. And most of those plays are very high time frame, and some of them will take months to arrive. And so there's often not much to do. But if there is, yeah, I manage this list. And yeah, let me read this real quick here. It's, yeah, so the whole moving in sync kind of thing in crypto makes it easy to grasp what crypto is doing, because if they're going up, they're going up. If they're going down, they're going down. Some outperform, some not. But in general, this also means, if you think about it, this also means, why would you even bother to look at more than, let's say, 5 coins? So the list is pretty simple, because it should be BTC, ETH, maybe one altcoin of your choice, and 2 majors. And this what I would consider the dominance charts. And yeah, ETH BTC, for example. And this can already be it. And then if you add more altcoins on top, it will not add any value, because, as you said, they move all in sync. So what is the real value of like spreading yourself thinner and trading 5 setups that are all the same setup? It doesn't really make sense. But people seem to want to own altcoins in order to like just to have them. And yeah, oftentimes there's no rational sense in their decision making. And for TradFi, you should mainly focus on the SPX and the Nasdaq, because if you, for example, have a bias on the Nasdaq, like I've shown in my videos and in my post, if you have a bias for the Nasdaq that it's going to go down from here, you know that the tech sector will most likely not do super well. And you can then look for shorts in the tech sector. And it's pretty much the same like to say, okay, USDT, Tether dominance is hitting a level, and so you trade based, you base your crypto trades on that. Or BTC is hitting a level and you take an altcoin trade based on that. And it's similar to the Nasdaq, because the problem with the Nasdaq is it's only a 23% move. So if you want to trade that, you need to put in size in order to make it work, because yeah, one contract is already a few $100. And yeah, obviously, as said, with a 20% move, you either need proper leverage, which is not always accessible in TradFi, or you simply trade another idea, which is in this case for me, Apple, Meta. So there is a rational, oh no, it's in this list, a rational advantage in taking those trades, because I don't want to lock in all my capital into one idea. And for example, the same move on Meta, for example, from this top down is already 30%. So obviously my whole position size is way lower, because we have more volatility. The idea is the same. We have the Nasdaq is most likely to go down. Meta is more volatile, so I need less margin, less position size to achieve the same potential profit. And so there's a real actual advantage in doing that. And they're not all moving in synchronicity, which means if you have a bias on the Nasdaq and the Nasdaq is maybe going down, or you missed Apple or whatever, and you see this pump on Meta, you know, okay, nice, I can get in here while the same idea is still valid. And this is what I love about TradFi actually. It makes it a bit more complicated to track all of that, but in reality, it's an advantage that not everything moves in sync, because you have different opportunities all the time. Some things go up, some things go down, some things lag a little bit behind. And in crypto, it's all in unisync most of the time. So yeah, you have one, you have them all. So I don't even bother looking at most altcoins anymore. And yeah, and for example, Palantir, I didn't catch it up here, but the same idea. We have the support and resistance retest, adding to my Palantir idea, adding to my Nasdaq tech sector short idea, and doing it way later and doing it way tighter. And the 40% down here, so size can be lower, less margin, same story. Yeah, and this is great actually. So to not take big losses is already a win, because the majority is taking big losses every other month. And if you're able to play this game, making small gains or coming out at break even and gaining experience, you could consider this already a win. And yeah, so in reality, the early stages, I don't know about your experience level, but the early stages of your trading should be gaining experience. And this can be on no money or little money. And as said, if you end on break even, I would consider it a win, because statistically speaking, if you don't burn all your money in the first 2 years, you're already a winner. This is like the reality of the market. And people think they're gonna get rich quick, but in reality, they should aim for not like getting wrecked in the first 2 years, actually. Yeah, so nice reflection. Maybe you can elaborate a little more why it was a hard month. So trading, regarding trading, why do you think this month was worse than other months? And what could you have done better? Maybe you can also include it in your analysis. It doesn't need to be right now. But in general, this is a question you should ask yourself. So I just decided to move my stop loss of ADA from ADA to break even, because in reality I took this lower time frame long on ETH, which made me already money off this move. And if this move is done, I profited off the move, and I want to get out at like with this profit more or less. I don't see a future where I would hold ADA at this point. Yeah, I have so many plays, to be honest. This is just like, these are my least favorite trades. I take them because if the opportunity is there, I just try to seize it. But in reality, altcoin trades are my least favorite trades, and so I manage my risk most tightly on those because I know how they are. I know what they do. I know what their purpose is. This is like, the purpose of them is to wreck people all the time. There is no intrinsic value in none of them almost. And so yeah, I touch them only if I have to and if the opportunity is there. And it didn't develop as I thought. And also from a timing perspective, I accept that I'm not in this trade should it work out. And should it pump, I will look at it and then I say, fuck, why did I do that? But I can't know, and nobody knows. And yeah, it's a nice level. I mean, it's at extreme discount, but there's more demand coming up. And looking at the US stock market and everything, I say I rather manage my risk a little more tightly because there's nothing lost getting out at break even. There's nothing lost. If it pumps now 200% and I'm not in, obviously like the opportunity cost of not being in this trade, I did not make this money, but I did also not lose anything. And every time I had the opportunity to make money, but I ended up break even, it's already a win for me because I positioned myself for a potential win, but I didn't lose anything. So everything all right for me. Great reflection. I think many people still rely too much on other people's opinions. And yeah, Money Tower's track record of predicting macro reversals and everything is good. But obviously size should always be in control. Chart should always be in control. We are not in his head. He's also not as detailed in his updates anymore. So it's pretty hard to tell how he's really managing those positions because it's oftentimes just saying, okay, he bought this or that. Yeah, so we can't really tell what he's really doing with those positions. And so the only good option is to take his opinion and say, okay, good. He has a good track record. This definitely adds to, like, for example, the chart, the demand, and a potential reversal. But still, our own risk management, our own plan, and our own idea above everything else. So yeah, good reflection. Yeah, I mean, I'm not sure what you trade, but I know you do prop firm trading and you probably trade forex and stuff like that. And there's a reason why I don't trade those markets and why I don't use prop firms. But in general, maybe you should base your TPs not just on a predefined level, but rather look at the structure. So let's say price comes to your first TP and you see that price is starting to make lower. So let's say you go long and you have a level and it doesn't really reach that level, but you see then price going down from there. You could then still decide to already do a little TP there. And if it comes back to your entry, you can either reallocate those profits. But it's super hard for me to tell because I don't know the setup, I don't know the market. In general, it's not uncommon that prices are doing that. Or that the markets are doing that, but this sounds like lower time frame stuff. And lower time frame is erratic. Lower time frame is pretty much a little bit like flipping a coin. And for flipping a coin, you need to have a very solid risk management strategy and very good understanding of RR to make it work. And it's less strategy in my view. Like I see the higher time frame swing game more or less like a chess game, and the lower time frame game is more like a statistical game. You just need to have those statistical triggers most of the time to make it work, to make like establish a system, and you just execute on that. And for example, to not round trip potential gains, I would recommend to, for example, implementing something where you TP once the trade starts going against you. And understand that if it doesn't reach your TP level, TPing early is not the real goal. But if it keeps on happening to you that way, you maybe should adjust the goal, or you should TP once the trade starts going against you. And if you remember my trades, I take, for example, those stock trades, the potential target is 1000%. And from those like 10 stocks I shared with a potential 1000% target, none of them really reached it. But I ended up making money because it pumped 200% or whatever, and then it started going against me. And then I had like, with a 200% move, you have time, right? And it really moves. It's not just like 0.5% or whatever crap in forex. And then it breaks against me, and it just ending up TPing 80% of this position because I can, and I see that the chart is going against me. There's a reason why I pick the markets and the assets I pick. I like volatility, I like big inefficiencies, imbalances in the market because I can exploit them. If you go for a very efficient market like forex, it will be very different, and you need to have a different strategy for that. And I can only tell you what I do and what I figured out along the way. I traded forex, I use prop firms, all that. It's not my way of doing it. And so either you adjust that or you find something that works within this market. I'm not saying it's not possible to be done, but for me, I just went somewhere else because I always go with the flow, and why would I pick the hard way? But I understand some people want and need to trade with prop firms to increase their capital. And if you want to make it work, obviously you need to find a solution for that. Yeah, we can do that. I think there is a similar question in the wish list anyway. I wanted to hop on that anyway. Yeah, so own analysis is something I'm trying to prioritize. And this is really what I'm aiming for here. That's why I'm not a friend of a setup channel, because people should be their own traders. From the beginning, from my first trading account, I started mapping out my own ideas and trading them. And I did so many things wrong, but I learned much more than looking for other people's opinions. And obviously still I looked for other people's opinions at that time, and I still like got confused sometimes because some people were bullish, some were bearish, but they're trading different narratives, different time frames even, and stuff like that. So there was no advantage at looking at all those opinions. It was always just making my own plan and sticking to this plan. This is like, in my view, one of the biggest steps to really become a profitable trader is to stop looking at other people's opinions all the time. And it will also lead to more self-confidence, which then leads to higher conviction to stick into trades. Okay, so wish list. The idea for trades: high time frame to low time frame to scalps. So how to set the idea for trades? So interesting question. So first of all, I always keep the majors in mind, and I can only repeat what I said before. If the Nasdaq is starting to range and starting to roll over after a 60% move within 1 year, I get cautious, because we had like 4 years of bull run, incredible performance. It starts ranging, and usually if it starts ranging, that's not super bullish for the market. And I put this into context of for what kind of trades I'm looking at, because if I look at a chart that's right here, I'm definitely more on the long side. If I look at a chart that's right here, I'm definitely more on the short side. And all of this goes into all my other trades as well. And then, for example, I have several sources, like videos I watch, or in general, like I'm pretty interested in life. And if I, for example, think about something I use on a daily basis, I just dig into this narrative and for the newest developments and stuff in this sector, and thinking about things that are missing in this area of life or technology. And yeah, so I study certain narratives, for example, in the stock market, and then I came up with my list here, taking information from all sides, building this list, looking for stocks, and obviously then I trade them according to my bias. And I mean, we can dive into that as well, but I mean, we have already a lot, we have more things on the agenda. But then I look for a technical reason to execute a trade. That's actually not the best example for my Nasdaq example. So let's take IBKR. It's overextended, it's in super premium all-time high. It's doing this 3 drive here. It's breaking the local structure down. It's aligning with my Nasdaq idea. And so I simply execute this trade, put my stop above the high, and that's it. And I target something like this, where there are big gaps below the $50 key level, big demand, big gaps, even some double hidden monthly breaker block, I think. So this is a good target. It's also a good average percentage drawdown. So if you look at past drawdowns of certain assets, 40% for the tech sector in a bear market would be nice, or is a common pullback, let's say. Okay, this one was a little bit longer, but in general, you know what I mean. So realistic target is not just something like that, but also the percentage move. It's very unlikely that it's pulling back 90% from here based on the structure, based on everything. If it does, nice for me in this case, but I will definitely not wait for that. So I have a realistic target, I have a realistic outlook based on the majors, and then I execute on what we always talk about: supply, demand, premium, discount, support, and resistance. And if you see, so for example, each and every trade in my portfolio is serving a purpose. So if you look at Palantir, for example, it's different. It's more a mid time frame. Yeah, it's definitely not as a higher time frame high as here. So the size is not as I would have taken, for example, up here. But I didn't take this trade, so I have only this opportunity. I would say the probability of a reversal here was a little bit lower than up here. So simply because we pulled already back a good amount. And still, this is like, it's still based on the Nasdaq. It's the same trade idea. It's being short US tech sector. And this is just coming convenient that we are testing the support and resistance level here at the 0.5 on bullish news. And so this a little lower time frame, but adds to the same idea. And the lower we go on the time frames, so if you, for example, now, I don't have any scalps or lower time frame trades to show actually right now. But for example, if I would now look at the 1 hour or whatever and take a trade based on that, obviously the Nasdaq higher time frame idea has not so much weight on that anymore. Obviously, if I aim for trailing a moon back, I would then still trying to go short. But at the same time, having so many shorts already, I would probably rather look for a long. And this is, for example, what I do here with those quantum computing companies, because QBT, I got stopped on this one, by the way, if you've seen it in the Discord. I entered here based on a trendline break. I got stopped out now, but this was countering my short idea. And now you could say, why would you do that if your main bias is lower? But in the end, I have no glass ball. I trade probabilities. And so there was a probability that my Nasdaq and all those shorts I took fail. And I don't want to round trip all of those unrealized gains, because they were all in profit. So it was likely that I do not take stop losses on them anymore. But obviously I pay back those unrealized gains. And so I try to counter that with taking a long here against my thesis. And again, I take this on lower risk simply because it's against my main thesis. But why wouldn't I try to trade it? We have the trendline break, we have the demand, and yet it didn't work. Sometimes it's just like that. And yeah, it was as a hedge meant to my main higher time frame idea. And yeah, this is pretty much how I structure my trades. And sometimes I have new companies popping up because I watch some videos, I learned something new about a certain sector, or because people start sharing charts with me. It also happens that people come around and say, hey, what do you think about this company? I have a look at it, and if I like it, I put it onto this list. And yeah, there are so many things already. I'm not actively looking for new charts all the time. Most of the time they somehow come to me in form of a video or a real life experience or somebody telling me about a certain company. Yeah, so context again comes back down to the Nasdaq, for example. This is my higher time frame context. We are super overextended, risk markets, gold, oil, everything is going volatile, everything is going crazy. This is not something normal. And if we would be at the low, I would say, okay, this is not something normal for going down. And now we are super overextended. So obviously this all adds to my context of being not so bullish, even though I take some longs. And this is for me context. Also having an understanding of macroeconomics, having an understanding of what interest rates mean, not what retail thinks interest rates mean, but what it really means to the market, to the real estate market, to people's lives, actually, people that bought on 0% interest rates or very low, bought their houses at all-time high, what it means if interest rates are going up and house prices are going down. These people need to refinance at some point. Their houses are not the same worth, have not the same worth anymore. So if they sell, there will be a deficit. All of those things, like there are so many things, in my view, people have to study. And it's not just, ooh, there is a block, I take this trade. If you want to be a swing trader, you have to put so many things into context. And this is, for example, one of them. And it's also looking around, looking at the past, looking at history. Nobody bothers even to look at history. Nobody has really looked at what happened in the 1960s, in the 70s, in the 80s, in the 1920s, what happened even before that. The stock market is around since hundreds of years. Nobody's interested in that. Why? Because everybody just wants to trade or just wants to do whatever. I don't know, but I tell you, for swing trading, it's super powerful to have a clear understanding of that. And also like the chart I've shown so many times before. Where is it? Oh, here. Like tracking. Where is it? No. Tracking the news. Everybody's saying like, oh yeah, we need to look at the news, and the news is super confluence and confluence. You hear people talking about things they never studied, and nobody looking at the past. And how would you want to put things into context if you haven't tracked the past to build yourself a context, and to look at how news work, how whales work, how the powerful work, how the system works. There is a lot of things going into when I make a decision, but I reached a point where I make those decisions almost subconsciously because I spend so much time studying those things. I'm a friend of, if I do something. So for example, if I drive a car or ride a bike. So if I ride a bike, let's ride a bike. If I ride a bike, if you think about everything, the physics and everything, and even the fact that if you ignite a turn with a bike, you steer in the wrong way in the first second. If you ride the bike next time, look at that, because if you want to go right, the first thing you do is to steer left, because then the bike will flip to the right side, and then you start steering to the right side so you don't fall over. But in reality, you steer in the wrong direction the first second. And this is not something you do consciously. Obviously, if I'm telling you now, or if you know about that, you will see that. But in reality, you just drive a bike. And I'm a friend of making things, putting it, like learning so much about it that you can do it subconsciously. I think like mastery or something, being good at something begins when you have subconscious competence. And for that, you need to do those things, trade, execute those trades, manage those positions, and learn all of those things. Especially if you want to be a swing trader, those things matter. It's not just a level here or there. That's what people like to believe. People would love that it's just like a video game. And hey, if you trade lower time frame, you can play it like a video game. You can imagine it's like Tetris. You just wait for the right formation and you execute. But on higher time frame, if you want to predict the future of the system, you obviously need to understand the system. Market rotation, it's just also something based on all that. Looking at, for example, let's take the energy sector. We have a development where everything is becoming electronic and AI and all that. Everything needs power nowadays. So eventually power will gain traction. And your job is to figure out, looking at different charts, looking at different like sectors. Oh, nuclear undervalued, oh, this overvalued. Solar was a narrative for the last 15 years. There was this green agenda in all countries. Nuclear was super undervalued. Countries going away from nuclear. But then looking at the technology and saying, okay, nuclear is actually a good power source, especially if developed further. And then you look at the charts and then you say, okay, good, this company is super undervalued. They provide some technology that might be like interesting in the future. And so why not expecting a rotation at a certain level? That's based on TA then. How to solve the feeling of expectation from the market? Difficult one. Because I think people oftentimes have not even cleared their expectations for life. And I think the market is even more difficult because the market is technically speaking, the opportunity, like I see the market as this huge field of opportunity. And it's so much opportunity like almost in no other industry. If you know what you're doing, there is an opportunity to make money every single day. And so it's a possibility is actually the right word I was looking for. So it's this big field of possibility, and you can step on this field every single day, 24/7. And the market is able to fulfill the wildest dreams if played right. And then also those dreams, they get leveraged, or those ideas of those dreams get leveraged, and everybody can make them, blah, blah, blah. So people, because of all those possibilities, people start projecting their dreams and expectations onto the market super easily. And for example, I didn't learn to handle my expectations in the market. I had to learn it while skiing, actually. And everything you do in your life can be a super great teacher if you're willing to look at. And for me, for example, when you want to ski like I do, like free riding, you need good snow. It needs to be stable, and best case, it needs to be fluffy, because then it's most fun and stable. It should be stable to like be safe. And this combination is actually rare. So from all ski days I have in one season, maybe 20% of the days are like that. But you can't know if you sit in your house. You can study the weather report, but first of all, in the mountains, the weather is always a bit different than the weather report says. It's difficult, and each valley has its own like little weather system usually. And at the same time, you can define probabilities that today could be a good day, but then the wind was a little bit different. The snow was affected by the wind. It may be unstable. It may be super hard and shitty to ride. But if you go out there, I mean, you pack all your gear. It's not like I go out there skiing with my pants, with my shorts on, and I have to like prepare, right? It takes time. I need to get my gear ready. I need to drive there, and then the snow is shitty. And believe me, I had to fight my expectations there. But I also learned it because I like skiing, for example, so much that I just go outside and I learn to handle my expectations better. I'm not perfect in this regard. But I'm way better. And the easiest key to like handle my expectations was simply to enjoy every day out there, to enjoy the good days, the bad days, to enjoy the perfect days, the days where I just crashed because the snow is super shit. And I climbed up the mountain and I figured then that the snow is not what I expected. Still finding joy in those moments. And so the market for me, for example, is way easier in this regard because I don't necessarily love the market, but I love skiing. And if you're attached to something like that, I'm almost a bit addicted to skiing, then it's super hard to handle expectations. For me, the market is just a way to make money. So I don't have super great expectations anymore. But obviously it was also a topic. I learned it with skiing more than I did with the market. And the skiing factor helped me a lot to have not so big expectations with the market. Also, being focused on the progress, being focused on those percentage gains, not like the value of your money. Because people come to the market, they learn, okay, you should not focus on winning, I should focus on the progress. But then they completely neglect the fact that they are here to make money. So, and still, you shouldn't focus on, okay, I made so much money, I can buy myself lunch tomorrow, or I can buy myself this car or whatever. You should focus on, okay, this trade added like 5% to my portfolio. I aim for 10% a month. So this is already half of what I wanted to make. Doesn't really matter how much money it is. And then it's still focused on progress, but result orientated. And in my view, the expectations are way lower if you look at percent, because it's like, yeah, something statistical. It's not something you get super attached to, at least me, not me. And then if you think about that, if you think like that about the market, I think expectations will also go down. Hello, Jamesy. Nice to have you. What's your name? Yeah, Ray Dalio. Super interesting books, super interesting interviews from him. And I would consider myself and a similar type of thinker than he is regarding trading. I don't know him personally, but I aim for trading like him pretty much. And the way he looked at history and all that, it inspired me as well to do that, definitely. So for low time frame, high time frame is not that important. The more lines up, so if you align your lower time frame trades with higher time frame context, that's good. But obviously, as said, if you trade the 1 minute, it doesn't really matter that you think the Nasdaq is going down over the next 3 months or 4. That's not what this lower time frame idea is based on. Usually, you take this trade and you will close it within the same day, or keep a little runner or whatever. So this doesn't really matter. It's just yeah, it's just logical. Like uh, you get what I mean, I think. I don't think so, but you don't overcomplicate this. You look at a sector and you look, for example, at the nuclear sector, and it's super undervalued. You look at another sector, for example, quantum computing, and all those stocks went up 3, 4, 500%. So it doesn't really matter if those people from the quantum computing sector invest now in nuclear, but you know one sector is undervalued, one is overvalued. So you just position yourself according to the probability that you want to be in something undervalued, right? And that's pretty much it. And sometimes it works out, sometimes it doesn't. This is what probabilities mean. But obviously, higher probability, better. So I think I answered a good chunk of this question, how I built my thesis, and up, down, or sideways. Yeah, I like to say that because in reality, if you think about it, this is what the market can do. It has only those 3 options. And it's ridiculous, I know, because I know it's not that easy to execute trades based on that. But I like to simplify things as much as I can. And I feel like most people, they try to add more complication than necessary. But if you look at all this, what people are doing, like looking at 20 different charts and then total 3 minus total 1 plus Nasdaq plus this, they create those weird charts. Yeah, and to each their own. I mean, I'm not saying there is nothing to it, and everybody who's making money in the market, it doesn't really matter what kind of way, that's fine. But for me, this is all a bit overcomplicating things. Also looking at too many different time frames, I don't see a lot of value in that. But hey, as said, everybody has their own way of thinking and treating the market. But up, down, or sideways is pretty much all the market can do. And you have areas where up is more likely, you have areas and scenarios where down is more likely, and sideways can simply always happen. And it usually, this is also what I always do, if you remember, if I, for example, say, okay, let's remove this first. If I say, for example, hey, if we reach this level, people usually get super excited. We have this super crazy extension downwards, liquidation event, and people are super excited to go long here. But do you remember my post when I said, and also our streams if you were around, or my videos, reversals take time. If this is a higher time frame reversal, we will probably spend at least a month here. And now we are here like 50 days and we are pretty much in the middle of this range. So there was no reason to be overly excited about anything. The market has very long times of going sideways. Look at this whole chart. How much time do we actually trend and how much time do we actually go sideways? Sideways is probably the majority of the time. And if you play higher time frame, you will have to wait a lot through sideways price action. Look at this. Remember this. If you bought BTC here, it was the whole thing here was so fucking boring nothing really happened. And this is also on purpose because they wanna bore people that nobody's looking at it anymore. And suddenly this arises so that everybody here gets interested once again. So everything happens for a reason, but we have up, down, and sideways, and you have areas on the chart where one or the other is likely. And once we hit the level, this level may say, okay, upwards from here is more likely, but in between, sideways is probably very likely because V-shaped reversals, especially if it's a higher time frame reversal, are super rare. And so take all of this into account and prepare for up, down, or sideways. And for example, up here, down is more likely. Down here, up is more likely. And in between, there will be a lot of sideways. So why do certain levels, although they're technically valid, have a high probability of failing? Simply because people, I don't know what you exactly always look at, but first of all, it depends on what kind of technically valid level you look at. And most of the time you decrease your win rate by not aligning with higher time frame context. So if you're up here super long all the time and everything you try to do is going long, ever since here, you probably did not so well. Why? Because we're in higher time frame premium. So in this whole thing here, I would always look more for shorts in general. Not saying you can't take longs. I took a lot of longs on the way up here. I took a big long here, made a lot of profits here. But it's then I know about the context. I knew that I don't want to hold this long to 150K like everybody said. I want to make a profit and get out, and I want to be short here because it's to short here in such an overextended move at this stage of the cycle is like buying down here. And obviously, if you align yourself with that, the probability of winning is super high. But those opportunities obviously don't come around every day. And so if you take something within the move, it's still context. On the way up here, being long was still rewarded most of the time. Obviously, we have lots of sideways, lots of difficulties, wicks and all that still. But ever since we broke structure to the downside, probabilities for being short is increasing. What is going on here, by the way? And so aligning with higher time frame context will increase your probabilities of winning. And the same is true for the stock market. This is why I've said it like 3 times this time already. If you look at the NASDAQ and if you have an understanding of what this chart is actually telling you, you know that you should be more short. And that's why, for example, I took QBT, but I also said it's just a hedge from a major swing short idea. And that's why I did not size those trades up super much because I knew I'm trading against the higher probability setup, which is being short. But I can't short this here. This is not my edge, but I took all these other shorts on the charts I can. This is one that's telling me based on this one, it's in demand. But the probability of this demand working now while the US stock sector, the US stock market looks like it looks, is way lower. And once again, not put into context, it will decrease my win rate. Yeah, sounds like a good idea. I'm also open for just you guys sharing charts and ideas. Like, for example, Joe did here. Very interesting. Do that and also talk about it. I mean, I will answer it. I will say my thoughts to it, but interact with each other and talk about your ideas and what you think. And as said, I'm also getting a lot of my stock plays ideas I get from different kinds of people asking me about the company. How should I mean, there are thousands of stocks out there. I'm not sitting around here and looking at all of them. Sometimes people come around, hey, this narrative is interesting. They share it with me. We talk about it. We find the setup in there. And good for me, good for them. So sure, good idea. Exactly, context. Yeah, really keeping it simple. So you guys know what I use. I use supply, I use demand, I use range knowledge, I use liquidity autoflow knowledge. I put everything into context, and that's it. There's no fancy crap, no looking at 1,000 timeframes. Keep it as simple as possible. This is like improve your higher time frame game. Make sure your higher time frame game is on point. And if you then still want to trade low, mid time frame, whatever, go for it. But you should have your easy money plays. And I'm telling you, playing the stock market like I do, maybe not the refined investment kind of stuff, it gets a little bit complicated with all those stocks, but playing just the majors, and then you, for example, like I did, do you see the Nasdaq wants to go down? I short Meta. It's really not super complicated. And keep on like improving your A game first for those higher time frame plays, because then you have your easy money plays. And if you have those, everything you add on top, it's just a bonus. It's the cherry on top. But people wanted to have the cherry first, and that's why they struggle so much, in my view. So if your higher time frame investment, refined investment game, whatever you want to call it, swing trading game, is not on point, don't bother too much with everything else. Build a solid foundation, build something that your easy money plays, and from there you venture, you experience, you gain experience in different sectors, in different time frames, and you make the game gradually harder. Not start with the hardest thing and wonder why it's also complicated. Yeah, demand and supply. Regarding your question, I think I answered that by QBT. And all that. So look at this. This is a little bit like the crypto market. You look at the US stock market and you say, okay, it looks like it wants to roll over, but there is not a higher time from short opportunity. The higher time from short opportunity was in October, like BTC. And if you didn't short it here, it didn't really provide any pullbacks into this premium, right? So there is like either you short the momentum or you trade the lower time frames, but there is no way to get in. But there was a way to get this long as hedge in this case. But I knew this is a lower probability setup. So obviously I don't size it up as if I would have taken a short up here. And to be honest, you're not the only one. You are not the only one. It's like people think they play a computer game and there's a level I execute, there's a level I execute, there's a level I execute. And sure, as said, for some people, for some personalities, this is the way to go because for them it's just like that. If you're not like that, and I argue that if you're interested in my kind of trading, you are not like that, because otherwise you would not be interested in what I share and what I do. And there's a reason why, yeah, you're attracted by my style of trading. I think most people here are probably more the way of putting things into context and being more sniper. Like you take those trades all based on a reason, you put it into context. And this is, for example, like I do. And for me, it's not just a level here or a level there. And in the end, I'm happy if something worked out. For me, everything is like strategy. One position supports the other, adds risk, subtracts risk, hedges me, and adds more or less to my big strategy. And for all that, I put it into context. And also something, you're not the only one. How many people are still in the mode of I have to do something, I have to trade more? But if your high time frame game is not rock solid and you aim mainly for time freedom, location freedom, and just like having more or less building your dream life, get your higher time frame game on point first, because it will take way less time, it will be way easier. And while these positions are printing, you have sometimes weeks or months where nothing really is happening. Sometimes there is, for me, a whole week where I do nothing on higher time frame. Yeah, sure, I take my scalps, whatever, if there is an opportunity, but I take them because I have the time, because my higher time frame game is rock solid. It doesn't mess with anything of that. It's something else. And then if I have the time, if I'm around the office, I take an occasional scalp. Yeah, and I would recommend to to do that. Exactly. This is look at this short. I mean, I've taken it on 2% risk or 2 point something, and it's right now sitting at around 17R. The whole thing is bringing my portfolio up 36%. While everybody's bleeding, this trade alone brings my portfolio up 36%. If I TP it fully here, if it goes further down, even more. And it's still up unrealized 20%. And believe me, you can sit down and scalp 15 scalps a week and you most likely will not outperform this one swing idea. I'm quite sure of that. And it will take you 10 times as much time, 10 times as much stress. And most people don't really want that. But they're not really in control of their addictions, of their dopaminergic system. And they want to do something. They want to be busy. They want to be like excited. And sure, taking more trades can lead to more experience faster, but only if done right. And otherwise, you don't make things better. Sometimes bad behavior makes bad habits permanent and not better, because you keep on doing the wrong thing. And yeah, so believe me, for your life, for your mental health, for everything, most people don't want to be scalpers. And the market drags people into that by being boring, by not rewarding higher time frame ideas immediately, and all that. But believe me, bring your higher time frame game on point, and if you then still want to play lower time frame, you have all the time, because you make money on higher time frame anyway. As said, sometimes there are weeks where I don't move my swing portfolio a bit, because everything is just needs time to develop. And this is also a skill you have to have, because I'm looking at this damn trade here since weeks, and believe me, it was a shaky hold, because down you think like, yeah, it's working, it's coming right back up, and you're like, it's going back down, it's coming back up, it's going back down, it's coming back up, and it's like that. And I mean, this is a long time, right? This is since January. I'm sitting in this trade for 2 months, and only now it feels like it got rewarded. Obviously, it went up and up and up and up in all those single positions, but still, lots of patience is required and lots of not doing anything. And if you're able to play those plays, easy money plays, you have your easy money plays, you add something more difficult on top, higher frequency trading, you can then. But believe me, I think 60-70% of you don't even want to do that anymore, because you're like, why the fuck would I want to sit in front of my computer all day to not even outperform those easy money plays? And yeah, for some this might be a source of joy, like trading itself. But yeah, I say the majority, they don't want to do anything other than that anymore once this is flowing. But it takes time, it takes patience. Low time frame is like a dopamine rush, yeah, and it's designed that way, and it's gonna get worse in the future, believe me, because look at every industry. Every industry is the same. They wanna make as much money as possible from all customers, and they know human behavior by now. It's like human behavior gets studied since almost 100 of years, and in the 1920s, this guy Edward Barney, he was the godfather of the modern industry, of the modern advertisement. And until this point, people bought everything they need and not more. But Barney understood how human behavior worked. It's a relation. He's related. I think. What was his name? The psychologist. Not Nietzsche. What was his name? Sigmund Freud. Sigmund Freud was his uncle-in-law or something, and they knew each other. And Barney applied human behavior, psychology, the study of human behavior, into industries. And from this point on, people did not buy what they need. People did buy what they want, and they created desire. They created the urge to buy something. And ever since then, they improved this game, and it's applied on every industry: clothing, food, porn, pharma. It doesn't really matter. On every industry, there is they want to make as much money as possible from their customers, and trading is not different. Trading is one of the most pure forms of business, and they design lower time frame price action and exchanges and all of those things to make people addicted. Because many people actually have this gambling gene. I mean, there is a reason why casinos are a thing, why those slot automats are a thing, because a lot of human nature or a lot of people are enjoying that kind of rush. And lower time frame is feeding these addictions. And as I said, I'm not saying you cannot make money with lower time frame, but it leads lot more time, lot more experience. And most people, once they solve the higher time frame game, they're not even interested in lower time frame anymore. Because, yeah, why? Why would you do that? It's for me, for example. Other people might say, hey, this is so much fun to me. And sure, everybody has different hobbies. Why not? But in the end, we are here to create a life of freedom and abundance, and as much time as possible we want to have, I guess. And lower time frame is not the way for that. Base belief, there is no easy game. And yeah, I think this is also something like looking at your core beliefs. And I'm telling you, from my perspective, the game I play is super easy. Obviously, it wasn't always like that. I struggled a lot and everything, and you start losing faith a little bit along the way. But believe me, there is an easy, time-efficient way to make money in this market, and you will find it if you stay consistent. Yeah, that's great, Bashir. As said, get your higher time frame game on point, and then increase difficulty the more experience you get. Yeah, exactly. So my crypto portfolio is all active, and I usually shave off all profits and keep my margin always the same. And right now, obviously, this position is in good profits, but I removed the whole margin, and so my risk is still pretty limited to the exchange. Yeah, and I mean, you still ended up making money, and I mean, we could have gone up there again. I said it's a very unlikely case. That's why I kept my short. But yeah, now I'm sitting in this play, and it's treating me super well, and it's just a pleasure to have it, to be prepared for every outcome. And this is how I play all my plays. And I usually also do not TP fully. I always keep a runner of like 30, 20, 25% to, just for the case I'm wrong. And just for the case of, like, for example, I will TP once should we get another liquidation cascade, I will TP into this cascade, because I think things will start to break should this happen, like crypto wise. And I don't want to have this money on the exchange anymore then. But I will still keep like 20% or something of this position to just to have it, because this money I can then again use to counter my potential long ideas. And it makes such a big difference for the mental game. If you're prepared for everything, nothing can hurt you. It goes up, it goes down, doesn't matter. I have for everything, I have a position, and I have always something I can make money from. uh, Captain Obvious has spoken. No, I'm just joking. Yeah, but I mean, I couldn't know beforehand either. So it's not like I'm looking at the chart and saying, yeah, for sure, I'm gonna hold this. This is gonna be a 20-hour trade, no problem. I didn't know either. So I also have to deal with the uncertainty. And this is why, for example, I did on this liquidation event, I did a 20% TP, because I said, okay, if we go back up here, I want to have some money to reallocate in another short. And I got front run on this spike here. I wanted to add something back, and I was on very low size, and I TP'd this here somewhere. So it was not really significant. But then once this started to happen, I at this point, I pretty much knew that we most likely do not reverse from here. And so I took just some longs, some small longs, instead of TPing from the short. And this is also a good way to handle the uncertainty, because instead of buying via selling my short, I bought by taking another long. Yeah, makes it easier to handle the uncertainty. Again, preparing for every outcome is the key. Oh, that's bad. The Century of the Self, Sigmund Freud. Yeah, exactly. There's a film that's called like that, yeah? Right? Yeah, supplement industry. Best example. We all need to take 25 grams of creatine now, you know? My capital in play, I always keep some cash, but this is usually then, the cash is usually then also allocated in some kind of short-term T-bills or whatever. So I get some return, monthly return. It's not significant. It's 2% a year right now, real yield. But it's still, put your capital to work as good as you can. It's always my philosophy. Weekly, monthly performance that's based on my TPs. For example, my crypto account is then based on my TPs, because if I look at the statistics of my account, it's only based on TPs. But for my refined investment portfolio, where I took the short, where I take the shorts in the stock market, where I but also buy gold for maybe a longer term horizon, blah. It's all unrealized P&L, because it's not measuring the statistics like a trading account. It is a trading account, but it's not doing the same statistics. I let GBT calculate those statistics for me at some point, but I don't do this on a monthly basis. Um, and so it's based on unrealized P&L, but still it matters to me, because my goal is 10% a month consistently. And some months might be more, some months might be less. But the idea is to make 120% per year with my account. And obviously also unrealized P&L counts for that, because let's imagine I bought Nvidia in 2022, it does a 10x. There will be a lot of unrealized P&L. And I still consider this then money that I make, because I won't pay it all back. But obviously I do. So playing those volatile games, sometimes you pay back a lot, unrealized P&L, because I don't always TP at the perfect top. Sometimes it goes against me. I wait for a break of structure and TP then. And if I look at my unrealized P&L curve, it was way higher, but I never considered having this money, because my strategy did not tell me to TP there. So yeah, I know it's probably a bit confusing, but it's the best I can put it. Oh, by the way, bye guy. Yeah, sure. And the patterns are the same. It's simply because every price action pattern is nothing but a print of human behavior. And on every time frame, sure, it might target a different audience, and it might go faster and slower, but in the end, it's creating liquidity, and liquidity is created by triggering human behavior. And this is done by moving the chart. And so everything is repeating itself. And this is also why I keep talking about those channels, and on the way down, how those bullish channels, never taking the low, creating the impression for many people that this is bullish price action. And you see, we have a bullish channel. We maybe have another bullish channel here. Yeah, and it's simply designed that way. Yeah, it's a difference between knowing about something and really understanding it. That's true. All right, I think we covered everything for today. Let me look at my list. We talked about performance reflection. So yeah, again, weekly, monthly performances. I'm gonna do the performance. What did we say? No, the setup reflections for single setups. So single setups go in here. Let me do that right away. So setup reflections. So you have a single chart, you have an idea. It's not like, oh yeah, I'm gonna take this trade. It's more like, okay, I took this trade, and this is the outcome. And here only this week I made so and so many percent. I took so many trades. I took too many little time frame trades, which distracted me from my main plan. Whatever goes more into this setup, single setups, or a set of setups. Obviously, also possible. I'm gonna make it nice after the stream. And yeah, I'm not even doing the poll for setup sharing because I don't think it's valuable. And yeah, I don't want to make this. I don't want to make this like any other group where everybody's sharing random setups all the time. Because I know many people don't like that and get confused by that, and that's why they avoid those big groups actually. But I think that talking especially about performance and those setup reflections, this is where the actual value comes from, because it's not like, look, here's a setup, we all need to take it, but rather like, hey, I took this trade, it was my plan, I executed on the plan, here's the result, this is what I learned, you can learn something from that as well. This is where the actual value of a group comes from in my view. But if you look at big groups and cheap subscription groups, there's always like, there's a setup, this, that, I did this, I did that, oh, I lost 50K, whatever. It's just emotional noise in my view. And we don't want to have that here. Okay. Yeah, from my side, I've said everything. I think we covered everything, all questions answered, I hope. If there's anything, let me know right now. Otherwise, we're going to wrap it up here. Glad that you're all happy. We do Wednesday, and tomorrow, when the European time shift is done, we gonna do, or I gonna do a poll where I offer a set of times when we start, and it's all based on UTC 0, so you have to calculate for yourself in which time zone you are, obviously, and you can then like, yeah, decide democratically which time is best for you. Yeah, and we're gonna do that tomorrow, and it's gonna be on Wednesday. And so, yeah, we will see. We have lots of different time zones now. It won't be perfect for everybody. I got a feeling that Barncore will suffer the most as Australian. But yeah, we will see. I'm pretty much in the middle, like between Europe and Asia. So for me, I can make it work. And I know that for the US guys, usually it's either very late, which is not good for the Europeans and for me. So yeah, let's see. We're gonna do the poll tomorrow. Other than that, have a great weekend, guys. We talk on Wednesday.